Bitcoin has been moving lower now after this correction is complete. So what I mean with this correction is what I'm talking about. Here we also have a correction. It counts better that way, but we'll get into that. So is this correction done now, or are we going to lower prices? Well, this is a scenario that we are counting a W, a zigzag down in W. We have a W, X to a Y to finish a bigger wave X. And here it's important to be aware of wave X fib target, because if we hit 70 here, see the 70 fib, at 11.9K, then the probabilities significantly decrease that we are looking at a deeper correction. Because if we hit this fib, then we are looking at a more sideways correction. And the same goes for this. So here we have the W and an expanded flat down to wave X. And if we hit this is the 70 fib taking from this low to this, then we can invalidate a deep, or in this case a shallow, double zigzag, which means that if we hit this, it's less probable that we will move up here, and it's more probable that this will be a sideways correction. So that is something to take into consideration. We also have a double zigzag count like this, W, and here we are counting X as a finished correction. And now we are looking for a ABC zigzag down into a Y. So we have a double zigzag. Here we are looking for an impulse, 1, 2, 3, 4, 5. This is very much a possible scenario as well. And here we are not taking out the 70 fib, as I just mentioned, to where it's just continuing down. And one thing to use and to be able to see all this a bit more clearly is to use a channel. So here you can see that we are using a channel for this structure down the W, the ABC. And you can see the breach here where we start another trend. And this fits great into another channel, as you can see here. And you can see here that the price respected the channel very, very well here. And then it broke through. So with that in mind, we can argue for that this is one part of the correction, and this is one part. And now we are dealing with the third and last part, which talks against a bit that we are moving up and then down. But it's more of the wave structure that is important in that case. So this is just a tool to help identify the different structures. And then we also have an impulse. We need to have a bearish and a bullish option, and this is the bullish one. Here we have a zigzag, finished zigzag, and then we have 1, 2, 3, 4, 5 into an impulse here, 1. And here we are looking for wave 2. If we hit this, that's the 86 fib at 108.434. Then the probability is significantly lower that this is a 1, 2. Then it's more possible that it's a B, C, that kind of thing. So that is something to keep in mind. And this is invalidation because this is the start of wave 1. And you know, you can't take out wave 1 with wave 2. That's a invalidation. And this is the impulse counted a little bit different. That's all. It sees the same result. So 1, 2, and so on. So that was pretty much it. We need to take a look now at this structure down and take it range by range. If this is an impulse down, for this to be a 2, we need to have a wave B. So we need to have 1, 2, 3, 4, 5, B, 1, 2, 3, 4, 5, and not hit the 886. And then we want an impulse up and then a retracement in order to have more confidence that we are looking at higher prices. And in this case, a WXY, we want to have 1, 2, 3, 4, 5, A, and then B, and it's, as you can see, it's the same scenario. We want an impulse, B, an impulse. The difference here is that we want wave Y to continue past this point. So if we take out this, then we know it's not an impulse, and then we know it's a corrective structure that is about to end. Because the impulse down, you can't really count it anyway now as an impulse down. Because if you see here, if I'm going to do it on a clean chart here, if you were to count it like 1, 2, 3, you can't have a 4 here because it takes out wave 2's origin. So you can't count it like that. And you can't either count it like 1, 2, and then if you do it like this, an impulse. So if you have 1 here, because now wave 2 took out the origin of wave 1. So it's not really possible right now to count this anyway as an impulse down, which means that this is a way higher degree of correction. And if this is a way high degree correction, then we are looking to take out this high at some point. You could argue that this is an option, like a bigger diagonal, because then you can count this as a 1, 2, 3, and then we are in bear market. But diagonals, we only are interested in diagonals after at least wave 4 is in. So, but it's good to be aware of. And the macro count for this is on a daily, and I can switch to weekly. You can see here that we are, as I mentioned in the last Bitcoin video, we would like to see price go into this prime zone, which is the territory of a lower degree 3 and 4. And these signs, these are fib targets, fib clusters. So at these, something is maybe happening. you can see it like that. So you can see here that this was the end of this sideways correction and moved up, and this, it was the end of this correction and we moved up. And here we are also moving down from this. So take it for what it is. It could be a sign that something is finishing and that something is about to happen. And this is the last fib cluster time. And if you remember this, September 28, maybe we are done here with the correction. And this is the absolute last one. So October 3. So yeah, that was pretty much it. I hope you have a great day.